Hello and welcome to Fin Business. We're at Cybos and I'm in conversation with Marc from Mckinsey. Marc, welcome on the show.
Thank you.
We went through the report that you published last year on the global banking and payment industry specifically.
Yeah.
You also published a report this year.
Yeah, we updated it.
And I would like to first ask you, what are the major changes that you have seen in last 1 to 2 years, specifically in the payment industry globally?
Well, first of all, this has been a period of unprecedented growth. Okay. We're trying to measure the revenues of payments in aggregate every year. And we've been on a trend of growth of 5 to 6% over the last years. And what we've seen literally in 2017 is a growth of almost 11%.
Okay.
So it's been a bit of a perfect combination of, on the one hand, obviously the world economy growing, on the other hand, the cross-border flows growing quite rapidly, interest rates recovering a little bit, and the combination of all of that has led to a quite significant growth. Obviously, this growth is mostly led by Asia, which is very clearly, still the engine, if you want, in terms of payment growth globally. Where we're seeing, on the one hand, the strong underlying economic growth, very obviously, but then also still quite healthy margins, higher interest margins than what we're seeing in Europe very naturally and in the US. So that kind of has led to a very exceptional year from a volume point of view. What you also see is that obviously the payment companies have been engines of substantial value creation for their shareholders. We measured the total value, total return to shareholders for payment firms in Europe, for example. And they have been leading the banking sector by a wide margin over the last 10 years. So they have almost created 3 times the value that pretty much every other component of financial services has created. So they are a quite substantial driver, which then also explains why both private equity firms, traditional banks, but also the fintech investors have had quite acute interest in seeing where the industry is going.
Okay, quite interesting. But now if you look at the geography specifically, whether emerging countries or Asia or even developed countries, what are the major mode of payments and where the revolution you have seen specifically?
On the, obviously everybody's thinking about the speed at which things evolve in Asia and in particular in China, where you have seen, as everybody knows, the big Chinese non-bank players picking up quite substantial momentum as far as payments is concerned. But overall, the global trend of substitution of electronic payments over cash continues very strongly. And it's interesting to see that it's almost the countries that have had the highest degree of electronification that still power ahead full speed on the substitution of cash over electronic payments. The classic example is Scandinavia, where you have almost 3 or 4% reduction of cash per year for a long period and continuing, and where you really see in many areas effectively cash disappearing as a practical means of payments, or almost out of the eye of the public. So it's a global trend. It's a trend where obviously the traditional means of payment that we are well accustomed to, credit transfer, direct debit cards, are still representing a vast majority, but of the transactions. But then if you're looking at internet and e-commerce and mobile commerce transactions, it's the first year where we're saying in geographies like China, the non-traditional methods actually representing the biggest part of the transaction. So you see a quite significant shift on that side. So it's on many dimensions technology moving ahead.
Okay, but if you could give me more details on that, specifically the dimensions of technology or the mode of transactions which they are using. So if you look at Asia, I would understand that China is specifically using mobile applications like Alipay and WeChat. In India, also some mobile applications and again biometric payments, and also the internet banking transactions is also one of the area. I understand that in USA or mostly developed countries, they are still using the cards.
Yes.
What are the new mode of dimensions that you see will lead the market going ahead?
The way which we like to think about it is less about what are the technical rails or what are the form factors, but what are the specific problems that we're solving for end customers. And for me, that's also almost a more fruitful way of thinking about it. And what you do see in a very general term is that, nobody likes paying. People like buying things, but people don't necessarily like paying things. So the more, in a way, the payment transaction gets embedded in the positive customer experience, the better off it is. And the examples are well known. But so to put it in an almost extreme way, the future is one where payment disappears because it has become so embedded in the customer's experience, the consumer's experience, the journey, so to speak, that nobody thinks about it anymore. So we could very much imagine in a world where, people worry about being equipped in any situation, or merchants worrying about their customers being equipped with a means of payment, but then nobody really concerned about, is this now a card transaction or a wallet transaction? Is it debit or is it credit? Is it bank A or is it bank B? The only important thing is I'm able to pay, or from a merchant's point of view, my customer is able to kind of complete the transaction.
True.
Certainly from a retail point of view. I think if you go into corporate payments, they're obviously, in particular when you're getting into larger corporates, they're very much interested by the technicality of, how exactly does this work, the transparency, the predictability, even probably more than the speed. And, you've seen the big success of GPI from Swift, which is very much testimony to the world expecting reliable, fast, predictable, transparent solutions for things to be delivered. And, we believe this is certainly an area in which we will continue to see substantial progress.
Okay. Going ahead, how do you see the world of payment market in next 2 to 3 years? Do you think that the cash will be wiped out of the system at least 30 to 40%, or what percentage?
Yeah, no. Look, if you measure the part of electronic transactions over the total part of transactions, there's still a wide range of going from Asia at probably 15 to 20% of the transactions being electronic transactions, to Scandinavia, where we're up to 80-85% of electronic transactions. So there's still a lot of space for transactions. I'm talking number of transactions, not in value. But there's significant space for this to change. Now, payment behaviors change slowly.
Yes.
So you see, as I said, erosion. You see this rate of cash going down at a certain speed. But I don't think that we'll see the disappearance of cash anytime soon. Actually, interestingly enough, what you can show is that the latest report of the European Central Bank shows this, that the amount of cash in circulation in Europe actually increases. Not in relative terms, right? So it's going down in terms of relative number of transactions, but the absolute amount is still increasing. So I don't think that we're in a situation where we will see cash disappear, but we will see continuous, the marginalization of cash transactions as we know it for the moment. The future going forward, we see quite substantial growth. And so we believe that in terms of overall revenues, the payment space will continue to grow at between 6 and 7% per annum for the next 4 to 5 years, which means that by then, we had predicted that the payments industry would be a 2 trillion industry by 2022. That was last year.
Okay.
Well, we might actually get there earlier. So I think we came out at 1.9 trillion this year in terms of revenue. So if you kind of add the growth rate, that means that by 2025, we're probably talking about something which is closer to 2.5 trillion in terms of total revenue. So that's growing fast. That's obviously predicated on economic growth as foreseen by EIU or other reputable outfits. The number of, the payment revenues and the growth in particular is highly dependent on the overall growth of the economy. So we see continued rapid growth. We see continued electronification, reduction of cash, probably a fragmentation of the means of payment, a fragmentation of the rails, interchangeability, and therefore also opportunities for players to kind of orchestrate ecosystems, or orchestrate customer experiences in the sense that we described it before. So we certainly see very exciting years coming up.
Great, Marc. Thank you so much for that information.
Very happy to be here.
It was wonderful chatting with you.
Nice.
Thank you so much.
Thank
you so much, Marc. And thank you so much for watching Friend Business. That was Marc from Mckinsey, who spoke a lot about global payments and the trends in global payments. Thank you so much for watching.